Hello everybody, welcome back. Let's get stuck straight in then. A bit of a late start this morning. Kids been a problem before school, so here we are. Let's look at the dominance chart before we start anything else. So we're currently below moving averages on the 4-hourly, all moving averages. The dominance chart is not perfect, but it's a decent guide. And at the moment, being below this 200 exponential is a good sign. What's better than that though is the daily, which is also below the 20 moving average in the 10 and the 21, or actually getting rejected from there yesterday. So there is a bit of a problem that exists, like we said down here around 57.33. If we're going to get a bounce, it could happen from there, but if we get a breakdown from there, the alt season continues, probably quite dramatically down to 55.66, which again is only small on this chart, but because it's such a diluted market, that would equate to quite a lot of gains on altcoins. So we're still favouring the continuation of alt season. I suppose I said the word. I don't like saying it, but I suppose it's true. To complement that, the total 2, obviously with the pump signal, with immediate continuation above the 200 exponential as well, with only the top of this descending triangle and the 200 simple moving average sitting at that perfect $1 trillion market cap. So it does look like we definitely, even if this is just a dead cat bounce or an alt rally that's only going to get swallowed back up by Bitcoin, which is a massive, almost inevitable possibility anyway, it still looks good for further upside. 2 hidden drives, bearish divergence, or 2 drives of hidden bearish divergence. Now, what I was saying yesterday is still the case on the S&P. So the US 500, the pre-market, we've got 2 very overheated reads on the money flow index, the most overheated reads we've ever had on this particular chart. It's not the same for SPX, but it is still hot. It's not the hottest it's ever been, but it is still hot. So there's plenty of room for it to run, but this, I always use the US 500 as it's just a more useful chart. The liquidity is not as much, but it's a very useful chart. So I like it, I prefer it, and what it's telling us now is that this is pretty hot, and to expect, even if it's just a small pullback, is quite likely. So we saw that from yesterday's open, in fact. So we opened up 0.75%, and now we're more or less back down to where we opened from yesterday on the pre-market. So we're back down towards that 20 and the 21 on the 4-hourly. Further moves down is absolutely fine. I was saying yesterday that a big pullback could happen, and it could. That daily overheated read is not to be taken lightly. It's a volume indicator. If there was a time to close trades or dump onto the market, it's there, because that's where the liquidity is at its highest. Getting your money, basically. Imagine a big pool of money. It's right filled to the top. If you start scooping out of that right now, you're going to get your bags emptied, and you will do all right financially out of it. It's a counterintuitive situation for most people. On top of that, the 4-hour has got plenty of drives of regular bearish divergence, which may have already peaked at the top here. So we've just got to be careful. As bullish as Bitcoin and crypto looks, which it does look, we do have to be careful with that. I'm still looking at algo with the pump signal. So just a reminder, we are doing a live stream again tonight. We're doing Tuesdays and Fridays. Last Tuesday, we saw so many altcoins with pump signals, and now obviously we can see them fulfilling that. They're doing really well. So there is value to these streams, I suppose, to get your foot in the door if you want to try and boil down these markets and get some positive outcome, really. And yeah, over the last few days since the last stream, those pump signals are certainly working out, as I'm sure you have recognized. So we're doing one tonight anyway, if you want to join that. So back to Bitcoin. We've not even spoken about Bitcoin yet. Bitcoin is now broken above the 200 simple, which is the last area of resistance of the daily moving average. And we're into this box. So the next area, if we're not going to get rejected here, which at the moment doesn't look likely, is going to be around 68,000. So it does look pretty good for continuation, with the pump signal as well that was baked in on Wednesday morning, really. So that looks good. Let's have a look at momentum. Daily hasn't got a problem. So that makes me believe quite strongly that 68,000 is going to get hit, maybe even higher than that, maybe even a full-on breakout. It's only the S&P that can cause a problem for this right now. We've got quite a few lower highs on the RSI and the 4-hourly. So this gives us opportunities to buy the dip, in my opinion, because look, if the 4-hourly wants to pull back, which it says that it does, bearish divergence here, got bearish divergence here, it does say that it wants to pull back. 3 drives is usually enough. We've got 3, even approaching a 4th right now. That's usually enough to knock it down, just a little bit. The last pullback that we got, which to be fair, was on this 3rd drive, hit the 50 exponential. So you'll be targeting that initially, to be honest with you. That's where you'd target, and that's currently 63,251. If we lose that, we're talking below 61,000, right? 61,000 ish area would be enough to liquidate a lot of people. I imagine there's probably a lot of people who've been FOMOing, longing those dips, maybe even longing the green tips. So with that would probably come significant liquidation. So don't be surprised to see a pullback down there. But currently, as it stands, based on the daily's momentum, it's still a buy the dip to sell the rip scenario. Ethereum lagging behind everybody else, but still pretty good. This is the one that I got into about 10 days ago now, really. 26% up. It's done it so calmly and quietly. It's been pretty good. I didn't buy it from there, by the way. I bought it around 2,300, but it's still been a decent little rally. But as far as it's concerned, the top target on this one is going to be between 2,868 and maybe even 3,140. So it does have further to run. We're not losing momentum. We're not as strong as all the others. No pump signal on this one. You wouldn't get a pump signal on Ethereum until you've closed above 29,500. Just like Bitcoin, the 50 exponential is where it dipped into the other day and held, and now it's doing a V-shaped recovery from the golden cross. But if we get the liquidation event, which could happen with late longs, you'd be looking for a deeper dive, probably only around 5%, 2,528, maybe even a wick a little lower than that, just below 2,500. But around the 2,500 area would be the place to go for, really, initially. That would be the buy the dip to sell the rip, a V-shaped recovery likely to appear from there to hit these targets. So whether they get hit first or we come down 2,500 and then move back up and hit those afterwards, couldn't tell you. Not really. I couldn't really tell you which one is going to appear first. Either one of them are scenarios that are very likely. So a rejection from here or here is very likely. A rejection right now, I suppose, is relatively likely. But overall, based on the daily, which is the most important part of this, it would be a buy the dip to sell the rip. Finishing off, I suppose that's all we really need to say. We've done stocks, Bitcoin, Ethereum, total 2, dominance chart. So if you want more, if you want to look at individual altcoins, ones that you're interested in, ones that you're following or trading or maybe even riding at the moment, join the stream tonight. Links in the description below. Alternatively, there is a Telegram if you want to join that, but just have a nice day and take it easy.